Good morning, everyone. Welcome to our Friday morning trading room. The market's just opening up and a little bit of a soft start to the day. There was a little bit of a flurry just before the open. The bars started moving rather quickly. Yesterday's session had a nice little move in to the upside in the afternoon, and then the downtrend continued well into the close and through the Asian session. A little bit of a rebound through the European session, but relatively quiet overall. We do have a slight gap above the market, and we're starting the day near yesterday's lows. So we'll see whether or not the market tries to bounce a little bit higher from here, or if it's going to retest the lows. I think it's a pretty safe bet that the market's in a transition. Black October and everything just around the corner. That's going to have probably a little bit more of an effect this year than most others, I think. Black October, of course, for those of you who haven't heard the term, the stock market usually takes a little bit of a dip around early mid-October. Some years it happens in September. But usually October, if there's going to be a correction. It's around the start of the fourth quarter. We're getting some early signals here. First micro macro cross on the hawk. That was good for a little scalp. But it's still very, very early. A little bit of a bullish push to start. Okay, they seem to be slowing a little. Okay, our Hawk already bullish. The Falcon also working a trend change signal. The Raptor here getting a little bit more serious about a trend change. Our cloud crossover signal is in the process of forming. It isn't a complete cloud crossover just yet, but you can see we're 3/4 of the way there. So the clouds are crossing. We're getting that pullback. We're working a buy signal. We've got the warning dots. I don't know if this signal will actually print. I don't see any background highlights. May have to get ready just to hop in with an order. Stops will need to go below the low. Ideally, stops will need to go below the low. But we definitely have a little bit of a bullish flavor to start. Mark's liking those early signals. Mark says it took 332 on the first micro macro cross in the Hawk right out of the gate. Well done. So that's the signal right here. The first micro macro cross, for those of you trading the Hawk, you know, it's really one of the most reliable signals that we follow. Unless the market is really dead flat sideways, you can see that almost every first micro macro cross signal will at least hit its profit objective. Very, very reliable signal. We have a bit of a sloppy 4-arrow consolidation going on here now. And all that earlier buying seems to have dried up. Where'd they go? Oh, here's my number one signal. And I do have the luxury of doing a second push entry on this one, and I think that might be advisable because that will allow me to cover the trade maybe a little bit tighter. Oh, and they slipped me a tick. That's not good. I don't like it when they slip. So I think the challenge for me is going to be riding out any pullback. Seems we're losing some momentum here around the 59.35 mark, which looks to have been the overnight high. That's where the sellers beat up on the buyers before. Alrighty. So the Raptor, considering this recent little move here, a test of the extreme and a possible counter trend signal. I'm not going to go too nuts on the counter trend side just yet. Okay, we're into the hard edge where we anticipate a reaction. I mentioned that really the best place for the stop is below the low of the day, the start of the day. Because there is going to be a pullback here from this initial rally. And I don't know if my stop's far enough away to actually ride it out. It's a fairly aggressive stop right in the middle of the trading range. Come on, buyers, let's go. All right, right, so now a with trend signal, the hard edge bounce. The signal forming pretty much the same price level as the initial cloud crossover signal. Yeah, Elmer says he's getting some slippage too. A lot of slippage, so a bit thin, Elmer says. Yep. It does seem, and I don't get it. I don't understand why the market is so thin this morning. Now, I'm not one to watch the news, so I don't know what's going on in the world. If there's increased tension in the market because of something going on in North Korea, or I always figure if it's really important, I'll hear about it. But as far as the markets go, a lot of times, especially the financial news, it can be very misleading. The only good thing about having the financial news is that you can deduct your cable bill as a business expense. Darn it, I'm going to get tagged. So there was enough follow through on this number one signal for a scalp, but not for our normal swing target. If I had my stops down here below the low of the morning, chances are pretty good that I could, if not get the trade to a profitable position, at least get it back to a break even. But I think I'm going to get spanked here in a second. And if I don't, it's going to go in the books as one of my luckiest trades ever. Okay, technically we now have a double pullback signal here in the Raptor. So the market pulling into the cloud twice, each time coming out with another buy signal. While we're waiting for this to develop, and while I remember, a reminder, there's not going to be a trading room on Monday. Initially, it was Monday, Tuesday when I spoke to you earlier in the week, but my travel plans have changed, and I will be back for Tuesday session, but not for Mondays. So sleep in or fly solo at any rate. Okay, here comes that bullish push. Let's see whether or not they're going to follow through on that. The seller's really sensitive to this whole 59.35 zone. That's going to be a number to watch. All right, so we know our first target is here at 59.43. And we would do well to get that. I'm going to look at really trying to ride this one out. Get a major swing out of it, maybe get it up to this next resistance zone. My thinking is if the market is going to take out the high, then it may well try to establish a trend today. This resistance zone here at 59.58, pretty close to yesterday's highs. And the market, oh sorry, not the highs, but the afternoon high. Here, which looks to have been 59.66. I wonder if they're going to try to make another run at that level or not. First, I got to write out this swing, of course. First, I've got to see them get above these highs. Right now, that's not working out so good. Oh dear. No, they're gonna they're gonna catch me. I was afraid of that. Now, that's not to say I was on the wrong side of the trade, rather just that I couldn't ride it out. I couldn't hang on long enough. Yeah, so we keep thrashing about here a bit. See, here comes the next run up. Like I said, I'm not convinced I was on the wrong side of the equation there. Merely that I couldn't hang on long enough. And now we're very, very neutral. Right into the hard edge of the band, you can see here on the eagle, also very neutral. Some of you will be looking at this eagle signal as a rule of three. Technically, it is a very small rule of three because we don't have too much of a trend preceding the signal. The rule of three, of course, the counter trend signal. It would resume the big downtrend that began yesterday afternoon, of course. So in one respect, it's a with trend signal, and another way of looking at it, it's a counter trend signal. Looks like for today anyways, 59.35, a real hurdle. It is Friday as well, and that tends to throw a bit of a wrinkle into things. If you wanted to stay bullish on the market, I wouldn't argue with you if you saw this as a hard edge bounce, a number 3 signal, even though it won't print as a hard edge bounce. Oh, it's going to run away on me now. Oh, shoot. Took too long explaining stuff. Well, there's a second push opportunity anyway. Okay, and I'm going to try the same thing as before. I'll see if I can't get it up here to the closer to the second zone. Isn't that unfortunate? They tagged me by a couple of ticks before turning the market and rallying higher. Scoundrels. So, definitely had the right idea, just couldn't hang on. That's why it's crucial not to crowd your stops. I suppose even more crucial when the market is inclined to wander. Come on. I need one more good push to give my stops a little bit more elbow room. I'm going to do my best to be patient with this trade, and maybe, just maybe, we can get it up here to this other profit target. So what's happening now is I'm kind of getting a cloud crossover type situation with the market going to attempt to move into the cloud. Shoot. Ideally, if you're going to try to ride this out, your stop should be back here still. This would be the best place to ride out any swing. By the way, if I wasn't swinging for the fences here, I would have found my profit objective on this little move up. So technically, we did find the high probability profit target, but Eric's being a little bit cute here, trying to squeeze a few extra dollars out of the trade. Again, I don't feel so bad about the market direction on this trade. I think a rally is looking probable. The big challenge for me is the stop placement. Is that stop far enough away to allow me to ride out the swing? So we're back at our high probability profit zone. If you wanted to punch out with $100 profit, it was on the table there for a few seconds. Come on, keep going. One more push. We'll give it a little nudge. There you go. Get up there. If you push it with the mouse, it will get the market up above that little hurdle that it's encountered. Ah, come on. You know, you want to go higher, just go higher. Sellers laying it on here near the high of the morning. The high of opening range, 59.40 and a half. And that's where the sellers are trying to dig in their heels. I think they're a little premature. I think the sellers, the big sellers, are going to wait until we get closer to that 59.60, 59.65 zone before we see some more aggressive selling. But like I said, my challenge right now, I don't think is so much the direction as just trying to hang on. I need just to ride out this swing, and then I think we'll be okay. Come on, just get up there a couple of ticks. Certainly a lot of activity, though. Look at the size of these bars, you know, with the dynamic equivolume bars. Look at all the buying and selling going on in this price area here between, say, 59.37 and 59.41, just for rounding numbers. There's a lot of activity going on there. I guess we'll see in a little while who's going to come out on top. When you get all that buying and selling and prices aren't going anywhere, you know there's a lot of contracts changing hands. So just as a for instance, if the market continues higher, if you're selling here, where do you think your stops are going to go? Well, very likely your stops are going to go above this high, aren't they? Therefore, if you're a seller, if you're short, if you're one of these traders hitting your sell market button, here you can see the cluster of selling and the cluster of buying. They're pretty much balanced. But if you're short and your stops are right here, what's going to happen if the market comes up here and ticks 59.44, 59.44 half, 59.45? Well, it's going to start hitting your sell orders. So we know there's a lot of volume here, a lot of sellers volume, buyers as well, but we're focusing on the sellers here for the moment. All those, your exit order as a seller is a buy order, isn't it? So if we get above this zone, this 59.44 zone, we're going to hit a lot of buy orders, and that's going to spark the market higher. This is what traders refer to as trapping traders. You'll hear it mentioned from time to time. It's a very reliable strategy if you can get it. So if you're looking to buy here above 59.44, you're probably going to get some pretty decent follow through. This happens a lot as traders get stuck on the wrong side of a position, because most traders aren't going to keep a very deep stop. Most traders are going to keep their stops right there. Because they're shorting in anticipation of a resumption of the downtrend. They're trying to get on board early. Traders will also look at zones like this as a place to add to their position, because our trade's already at break even, right? If you wanted to get another contract in play, that would be the spot to put it in. But we're spending a lot of time drifting sideways, between, like I say, 59.37, 59.41. That's just going to be a huge price zone. All right, so we're getting the number one signal, the cloud crossover signal now. Clouds crossing, see, out of sync, back into sync. There's a little pullback. That qualifies as a cloud crossover signal. What I don't want to see is anything resembling a test of the extreme, a double top, just evidence that there's not going to be any follow through here to the upside. Come on, get away. Darn it. Gonna get tagged at break even again. Doggone it. Oh well, we gave it a try. Just not in a rally mood right now. Oh, don't tell me. Don't tell me they tagged my stop again, only to reverse and head higher. So we're into the hard edge. If we produce a buy signal here, that will be a hard edge bounce. We've got sell warning dots. We don't have buy warning dots yet. Here is a red bar buy that you could buy on the hawk. That's the only one looking bullish at the moment. And yet I can't help but think the buyers are still going to try to rally the market up. We're back into the hard edge, as I mentioned. The morning trend seems to be up. Or maybe not. It is Friday too. That tends to sometimes make for an odd trading day. Okay, the hawk flashing a first micro macro cross lower. The falcon already completed a trend change signal. The eagle still bullish though, as is the raptor. So a real mixed bag of signals here right now. And again, that just goes with the nature of the market, how how sideways the market is at the moment. Okay, I'm still looking for a possible hard edge bounce. As I've been saying all morning, I don't think I'm on the wrong side of the trade looking to buy. But I don't have the signal just yet. If the buyers are going to recover the market, they need to do it soon. Well, I guess we're in the top third of the trading range, sort of in the middle. Hit the primary resistance zone. That's that blue line right here. All right, give me a buy signal now. There it is. Okay, stops will need to go a little bit deeper just to start. And I'm going back with plan A. I'm going to try to run it up here again. I'll put my break even on the other side there. Yeah, that's a good tip here from Elmer. I'm not going to show it on this chart right now, but Elmer says he just likes to keep an eye on a regular MACD indicator. Try to give him a directional bias. If it's above the zero line, the midline, he's more bullish. If it's below, he's more bearish. Nothing wrong with that. If you're struggling with market direction, I can see that being helpful. Remember, that's the key, though, is does the indicator help you make a trading decision? You don't want to get in the position where you have so much stuff on your charts that you can't make a decision. And the temptation is that the process of tweaking your indicators becomes an end in itself. Well, we're back in this whole resistance zone between the 59.37, 59.41 region. That's a number you're going to want to make a note of. We're probably going to see a resistance line print there on Monday, but this is obviously a very sticky spot for the market. Did everybody go home already? Come on. The 59.44.45 area is going to be a substantial obstacle. I was going to bring a dome over if prices got closer here to the 59.44 area, just so that we could see the number of orders that were sitting there. But I don't normally watch the dome like this. I was just going to illustrate it for you today. But right now, we're not getting anywhere near that price level. As we get closer to that, if we get closer to that, you're going to see here around 59.43 half, 59.44, there's just going to be, notice how these top numbers are relatively always a little bit bigger, 150, 160, 170 orders. I bet you when we get up there, there's going to be like 200 orders sitting at around 59.44, if we get up there, I should say. Right now, they're very content just to waffle back and forth. All right, I'll put this away for now. I'll bring it back if we get closer to that 59.44 area, just so you can see it. Like I said, it's not something I normally follow, but I thought it might be interesting to see today. I imagine that pretty much all indicators are kind of flat right now, given that the market's been going sideways for the last hour. Almost. My stop was a little bit too cozy there. If I'm going to do this trade, I may as well do it right. Put my stop in the right spot. perhaps the better way to trade today would have been just to scalp in and out. Had 3 trades, all 3 would have reached a scalp target. Mark, killing it here this morning. Mark says, had 2 more divergence trades on the downside and picked up another $400, putting me over $700 on the day. Nicely done, man. Done for the week, finishing at just over $1,800. Not bad for an FOMC week. Nope, not bad at all, Mark. Well done. Are you trading 2 or 3 lots at a time, Mark? In futures, we call them cars. If you're looking to pick up on the lingo, if you're trading the Forex market, they refer to them as lots, but futures traders call them cars. Yeah, okay, so Mark says, depends on the trade, but anywhere from 3 to 5 cars. And that's the secret, folks, is a consistent, being able to make a consistent profit, even if it's not a big profit, but a consistent profit, and then loading up on it. Buyers only one more rally here. And the next one could be the big one. Sounds like I'm talking about an earthquake. Elmer is asking about the divergence that I mentioned. Mark has a divergence indicator. I think, Mark, you said you use it on the hawk. Elmer's asking, Eric, what's your definition of divergence? Well, if you're going to look at things like divergence, first you need an indicator that's going to pick up divergence. Divergence means prices and your indicator are doing the opposite. The most common divergent style indicators are MACD and RSI. Let me change these colors because I know that's hard to see. There we go. Isn't that pretty? Okay, so divergence means your indicator and your prices are moving opposite directions. And let's see if I can find you an example. Here's an example of divergence. So here on your MACD, for instance, MACD is heading lower. See on your indicator? And your prices are heading higher. That's divergence. That says, at least according to the MACD indicator, that the trend is getting weaker, that the uptrend is getting weaker. RSI tends to be a pretty good one at picking up divergence, and you would handle it the same way. Except let me get rid of this averaging line. So what you would be looking at with your RSI, you would be looking for prices and your indicator to do opposite things. So right now, prices are heading down. Your MACD is heading down. Your RSI is heading down. If RSI all of a sudden started making higher peaks like this, so you actually had an upslope and prices were continuing lower, that would be a bullish divergence. That would hint that, at least according to the indicator, the market's going to head the other way. Actually, another good divergence indicator is on balance volume. We'll make this a different color so we can tell them apart. Let's make it a pretty pink. Unbalanced volume is kind of cool because it actually calculates the volume. It actually takes volume into consideration, which is different. And here too, this is actual volume graphed. And the way unbalanced volume works is, if the bar finishes bullish, it plots positive volume. If the bar finishes bearish, it plots negative volume. It subtracts it from the volume float. So the idea is that you can see whether there's buying or selling going in to the market. And with unbalanced volume, you again would look for divergence between what the indicator is doing and what prices are doing. So let's see if I can find you one. No, here it's actually holding pretty tight for the most part. But every once in a while you'll find a spot where, say, prices are going up, they're making new highs, and your unbalanced volume will start sloping lower. See, here's one where RSI is kind of sloping a little lower. Your MACD kind of sloping a little bit lower. That's divergence. And when you see that, sometimes it's an early indication that your trend is in jeopardy, that the market may try to go the other way. All right, Floyd says, oh shoot, I don't have the Russell loaded right now. I'll have to load the Russell for next week. Russell says, looks like a big program went through the Russell at around 740 Pacific, so a lot of selling going on. So the market dipping a little bit lower. Yeah, Mark says he looks for it on the Hawk and the Falcon specifically, and it's a custom velocity momentum divergence indicator that he actually found from another vendor, but he says it works great on his DTS tools, just some experimenting. He stumbled onto it by accident about a year ago. Here's the important thing though. Mark says, I don't like having anything on my charts unless it helps me make a good decision. Took a lot of experimentation in sim before I implemented it. And that's so important. You know, folks, trading, it can be as easy or as difficult as you want to make it. The entry signal is only part of the equation, and yet that's the part that we always focus on, isn't it? The rest of it is your trade management and, of course, the psychology as well. Finding what works for you as a trader. And that's probably a good place as any to button up shop for the day. It looks like the market is going to go back to testing the lows. Maybe we'll see a little bit of a rebound. But overall, kind of a sideways sort of day, which I suppose is to be anticipated on a Friday. All right, boys and girls, I will see you again on Monday. Oh, nope, sorry. Slip of the tongue. On Tuesday, no trading room on Monday. We'll talk to you then. Bye for now.